You're watching Chairman's Briefing. Here we keep you in the know on metals and money. This episode is brought to you by Oregen Energy. Let's get started. Former St. Louis Fed President James Bullard is considered a potential Federal Reserve Chair candidate. And he said that he envisions a full 100 basis points cut going into 2026. His comments follow Jerome Powell's dovish pivot at Jackson Hole last week, where Powell pointed to a weakening labor market and said that shifting risks may warrant policy adjustments. Markets responded by pricing in a 90% probability of a September rate cut. While traders expect 2 or 3 quarter-point cuts before year-end, Bullard is suggesting a longer easing cycle that extends well beyond Powell's tenure. Powell's term as Fed chair expires in May 2026. Gold is eyeing $3,400 per ounce, while silver tests the critical $39 level, threatening an assault on the $40 barrier. Precious metals are rallying on expectations that extended rate cuts will weaken the dollar and boost demand for inflation hedges. Collective Mining expanded its new porphyry discovery at the San Antonio project in Colombia with a massive 172-meter intercept, averaging 1.4 grams per ton gold, plus copper, silver, and molybdenum credits. The discovery sits just 5 kilometers from Collective's flagship Diablillos project, which is home to the Apollo discovery that defines the company's $1.5 billion valuation. Collective operates 11 rigs across 70,000 meters of fully funded drilling this year. Oregen Energy began trading this week on the CSC under their new symbol ORNG. Formerly Supernova Metals, Oregen holds a 34% stake in Block 2712A in Namibia's Orange Basin. This is an emerging oil frontier with multiple recent discoveries made by major operators. You can watch our one-on-one interview with the CEO, Mason Grandeur, at the top to get a deeper dive on the company. AbraSilver hit another all-time high this week after reporting drill results that will extend the gold zone at its Diablillos project in Argentina well beyond the current resource base. The company released 3 new holes from its Phase 5 exploration campaign, with the standout intercept being 60 meters grading over 1 gram per ton gold, including a 17-meter section at nearly 3 grams per ton. 2 additional holes returned 16 and 21 meters of gold mineralization, respectively, with silver credits boosting the overall value. The results confirm consistent mineralization beyond what AbraSilver has already outlined in its resource calculation. 2 mining giants are implementing major cost reductions as operational expenses squeeze profits. Newmont is the world's largest gold producer, and they plan to cut all-in sustaining costs by $300 per ounce through workforce reductions that could affect thousands of employees. The company reported second quarter costs of $1,593 per ounce, which is 25% higher than industry leader Agnico Eagle. Newmont's expenses have increased 50% over 5 years, worsened by its $15 billion Newcrest acquisition in 2023. Rio Tinto launched parallel restructuring under their new CEO, Simon Trott, consolidating operations into 3 divisions while reviewing underperforming assets for potential sale. The company's half-year profit dropped to $4.8 billion, which is down 16% year over year and the lowest since 2020. Prices of 2 rare earth elements needed for super strong magnets have surged to their highest in more than 2 years after American miner MP Materials stopped raw material exports to China. This is a consequence of a trade war that's been in place since April. China restricted magnet exports around that time to the U.S., shutting down auto plants in the country. Washington retaliated by signing MP Materials to an exclusive deal requiring the company to stop feeding Chinese factories and refine materials domestically instead. The timing could not be worse for China. They're in peak manufacturing season for electric vehicles and wind turbines, just as their supply tightens. Analysts expect demand to grow 10% this year, while Chinese output increases only 5%. Rare earth producers are finally profitable again after years of selling below production costs, But magnet makers now face the question of whether they can absorb these higher material expenses. And that's your briefing for this week. Thanks for tuning in, and we hope to see you in the next one. I'm Rachel Lee. We'll see you in another episode.